Hey everyone, welcome to the weekly review. Well, the theme of this week has been, at least for me, confusion. I've never seen anything like it, and I think I said this before at some point in the past, but I'm kind of tired of all this new historic level uh, shit that is happening. And I don't mean like new all-time highs. I mean, what the fuck is this divergence? What the fuck is this bubble? And how long is it going to continue? So let's look at stuff. This is the one-day performance, mostly red. Friday we closed the New York Stock Exchange up-down volume at around 75. The low of the day was like 92, 93, but we got a bit of a recovery. We have new closing based all-time high on SPX and Qs, obviously. This is the heat map. It was again mostly Nvidia, Broadcom, Adobe this time as the savior of the day was Adobe. 1 week performance looks like this. Again, mostly red, a couple of names in the green. And the 1 month performance looks like this. A lot more red, a couple of green, Nvidia with the incredible 40%. And as you can see here, a lot of red. So the market is in a stealth correction, even though we closed at an all-time high. Brit indicators have been, while they were showing a bit of an increase on CPI day, they started going down again. This is one. The other one. It was trying to do a crossover, but it didn't. And finally, the McLaren oscillator, which closed down with a lower low, like minus 69, and is lower than this previous one, which was minus 66, while SPY is doing a new all-time high. Holy shit. I don't think there is, if there is a precedent for this, I could not find it. Usually when this happens, it's after a red candle. I've never seen a lower high like this on a new closing all-time high, and not a red candle. Okay, so we have positioning at an extreme, 93 on SPY, 95 on Qs. Nvidia is also 97 something, 94. This you can ignore, it's because of the stock split. It doesn't know how to treat it very well. We're getting a bit of a volume spike in it in options, which I expect to last at least until midweek. Um, at the previous high, we had also a spike in volume. This is the previous high, previous all-time high. And at that high, we had an 89% of delta was called delta. And now we are at 88. Positioning wise in Nvidia, we are super extreme. So we closed what? Above 130, 141.88. So we closed somewhere between these two. I would expect it can keep going a bit higher, but it will get rejected very soon, like a max 140. But seems impossible to go above this. So we should get rejected in this range between 130 and 140. Uh, Probably closer to 145 than to 140, but we will see. and most of them are above 80 in positioning. No, that's one. Apple is at 80 something, 83. Google 83, and also a bearish divergence here. Tesla went down, so it's probably not that high. Apple 84, but down from 92 on that last push up. So everything is kind of setting up for a pullback after OPEX. This is expiring delta. So how much delta expires in 0 DTE? 1 day, 5 days, 8 days, 14 days, 21 days, 34 days, 55 days, like a Fibonacci sequence. And there's a lot of delta expiring on everything. This is not a sign of a top necessarily, but more of a sign of distribution. When we get this kind of levels of expiration, we are entering a distribution phase, and what we will see is that we will get a divergence in positioning, and it will get lower and lower as we probably near September, and then we will get a larger correction. But for now, because we are delta pinned, we are above specific strikes like Nvidia above 130. I don't think we will go below 130 at least before Wednesday, because that's the expiration, and then possibly have a pullback after OPEX, or starting Wednesday going into OPEX, a couple of days potentially, and then going back up into month end. The problem is, just like the overbought names are in extreme bullish positioning and should see a pullback because of OPEX, all these names in the red here are somewhat close to bearish extremes, some more than others, and they should have a rally going into OPEX. So the question is, how we have two scenarios, one in which the beaten down names go down more in sync with the overperforming ones, because overperforming ones control the market. Like if Nvidia corrects, the market will correct. Even if a lot of smaller names go up, if Nvidia corrects, the market will correct. And the index level, I mean. But if Nvidia corrects and the beaten down names are going up, this is more of a rotation thing. The index will not go down a lot. It will go down minimally, like 2-3%, something like that. Because we should see Qs drop a bit more. Then DIA will recover, which DIA has been underperforming. And IWM will recover, and thus SPY will be stuck in the middle between Q's underperformance and DIA overperformance, so it will kind of go nowhere. The other option is the market corrects, which puts pressure on everything, because Nvidia corrects, everything else corrects. Breadth remains low, and we get all of these names that have been beaten down double their losses. I'll take Stone for example, let's say. So it's down like 12-13% from the top, 12.25. Uh, I, if you ask me, this should bounce. We are on horizontal support, and high chance that we see a bounce here. But if there's also the chance that this goes lower, and if it goes lower, it will go lower. It will go lower in sync uh, with the market, and the market should go down significantly. So maybe we see we double this, go down to 100, maybe not double, but this is still like 8%. And let's say Nvidia does like 10-15%, some will do like 8-10%, and that's kind of it. a bit of a overperformance from a name like Psalm relative to Nvidia, which will correct more. But like if you're in this name, it's still going down to 8%, so you don't feel good either way. So seeing what's been happening, I'm hoping we get a bit of a rotation. But if we get the scenario in which the beaten down names go down further, then we actually see a true correction on the market. And let's go back to SPY. True correction at the moment is probably this AV up. Oh no, what the fuck am I? It's not this one. This one. So like 490, which is almost 10% because we went up much higher. Let's measure it. Yeah, this is now 10%. Small correction, meaning rotation correction, it's likely this. This is at max 4%, something like this. This should go a bit higher, so somewhere between 3 and 4% probably for the whole thing. I don't know which one will happen. Like, I expected bread to improve after the CPI print, but it didn't, and this is concerning. But at the same time, because it's bread has been in a correction basically, and the McClellan oscillator, I'll pull it up again. It is low enough to consider this to be a correction. Like let's compare to what? To this period here. Sometimes when breadth corrects, uh, that is enough. Meaning even though price hasn't dropped at the index level, when you do something like this, it's enough for it to pick up and go up again. So we have the prerequisites for a correction that has happened under the surface. Maybe we do a lower high here, maybe like meaning we go a bit lower, but the McLaren oscillator, while going a bit lower, makes a higher low. And then we do this, we have a bullish divergence, and then everything starts picking up again and we go up on the McLaren oscillator. And that's enough. So my confusion is based on breadth, we should be at the market low, but we are at all-time high. This does not compute. Because it does not compute, it's very iffy to predict the market is going higher without some kind of correction in price. We have OPEX coming up, which is impending correction in price in the overperforming names, meaning these. But overperforming, like for example, Adobe, because it dropped a lot. Let's look at Adobe. Okay, Adobe was coming off a low. This is not an overperforming name. This is a recovering name. This is exactly what we should be expecting to see in other names as well. Maybe it drops a bit and retests like the 500 level is 525 and it goes down, retest 500, makes it a support. This is too low. Like here. Makes it a support at 500, it starts going up again because earnings were actually pretty good. But something like this is quite reasonable for it to happen, and it will continue going higher. The overperforming names are Apple, Nvidia, some of the semis like TSM, not all of them because AMD is not that high, underperforming. MU is at new highs. What else? LLY, this kind of stuff. Costco, overperforming name. Abercrombie and Finch, this actually looks like a good short now with the bearish divergence. Okay, so overperforming names like this, stuff that is at all-time highs. But at the same time, we have other names that haven't been performing, and I'll take again Som as an example. There are many others which uh, should turn up because of the OPEX cycle. So we should see Brett improving. If we correct, I think Brett will improve a bit, and that will give us the exactly the situation with the McLaren oscillator, in which even though the market may drop a bit next week, we will make a lower high, a higher low on the McLaren oscillator. Price will make a lower high or make a new low, and this gives us a divergence, and this is enough to get us a bounce on the McLaren oscillator. Then we look at VIX. VIX tried to go below 12, it's held. This is bullish. I expect maybe we get another attempt to go below 12, which will fail again, and then we get a big spike up. Minimum should be around 16. There's still a risk of going below 12 later, but for now, I think a quote-unquote correction is coming, and the question is how big or small would that correction be? Because I kind of expect it will be in the overperforming names, especially Nvidia. Okay, so consequences of this. The more and more concentrated the market gets, and is getting more and more concentrated, uh, the bigger the impact from name as Nvidia. And we get exactly the situation we are seeing today, in which market is at an all-time high with the majority of the market going down, which is kind of shit. This means one, hedges don't work. The usual hedges are market puts and VIX calls. Both of these have been underperforming in the in our circumstance. What happens when hedges underperform? People give up on them. Like if you have a balanced portfolio, like is the recommendation for building portfolios, meaning uh, buy many stocks, it doesn't really help you if your stocks perform like this and you get super outperformance in a couple of names. Uh, and maybe you are in those names, but you're not like 50% in Nvidia. You are like 10%. And all of this falling, don't Nvidia doesn't make up for all of this falling. So it's not like you are going to buy puts on every individual name you own because it's quite inefficient. It's a lot of work and pretty stupid overall. So you buy market index puts or you buy VIX calls. Both of these have been underperforming. What happens is people will give up on hedges. They won't hedge anymore. And we are going into an environment that is setting up for a mega large drop uh, in in September most likely. Potentially starting in August. There are 2 week periods in the year. One is February March, and the other is September October. We are halfway done through June. Uh, the weakness can start as early as mid-August, and that's when things get iffy. But given we are in the biggest bubble in history, most likely we will do a small correction, like equivalent to this. How low was this? Like 5%? No, it was large, 8. Less than that. And then we continue going higher and potentially even go super fucking nuts into the end of summer. Uh, okay. So as this rally will come and push us even higher, people will give up on puts because they have severely underperformed, and we will get VIX going below 12 probably. Uh, the market will be super fucking complacent, and eventually when uh, the correction comes, and it will come in September because of expiration and because the election cycle. Last one was 2020. We had a double dip. Which one? Then 2016, September 2016. Correction. It was again 2012. 2012, September, October. 2008 we had a crash, so it doesn't matter. But basically, every election cycles we have a huge run up into summer. Then we have the usually the biggest correction of the year going into September, October. So this year will likely be no different, and we will be going into it with an environment where people have given up on hedges because hedges don't work. And that's a very, very dangerous combination. So when we get a correction going into autumn, I expect it to be significantly larger than usual. So I don't think it will be 10%. I think it's going to be closer to 25-ish, something like that, between 20 and 25% when it does come. But for now, we do a small correction here and then we keep going up and up and up. It will depend how this one plays out. Like if we get a full 10% when it does come, let's say we do 10% now, then I would be less fearful of this because a 10% correction here will remind people to buy hedges. Hedges will begin working again and people will not be caught off guard. So getting a 10% correction now will prepare people for an autumn correction, and that will make the autumn correction be significantly smaller than expected. But if we get like 2-3% here, say we do this, then hedges will not have worked, and people will give up on them, and that's kind of all it is. So a correction here will save us from a larger correction in the autumn. If we don't get a large correction now, then we are probably going to get a couple of 5%ers along the way, but it should go pretty crazy mode going into the end of the year. Let me show the 2000 bubble, which we are exceeding now. So this period here, this was more or less 3 months, a bit less than that, and Nasdaq went up 63%. And there were several large corrections along the way, like 16%, 14%, 6%, 13, and so on. The point is, the quicker and the higher we go, the more likely it is we get this kind of flash corrections that won't stop us going up most likely. Uh, but like 60% in 3 months, we have about 3 months until September OPEX. This shit can be pretty crazy. And last week we also had a ghost print in Nvidia. Aside from the one, we have the one that is at 82 now, which is my target for when it actually corrects for real. But we had one much higher. We had a ghost print for Nvidia at 195, and that's absurd from my point of view. But who the fuck knows? Like uh, next earnings is August 15. Maybe we get a situation just like the Tesla stock split in 2020, in which we had a super surge at the end of the summer. Like we went up. Yeah, this. So from August 11th, because earnings and stock split announcement. No, I think only stock split. And we went up 83 fucking percent. Then we corrected 44%. But like in a month, this happened. So if Nvidia doesn't fuck up earnings or post an incredible earnings on in August, we could we could exceed what happened with Tesla and even hit this 195 ghost print. Seems incredible and slash impossible right now, but crazy shit is happening, man. Okay, now let's try to draw something for SPY and call it a close. I'll hide all these AVWAPs, only keeping this one because it's the most relevant one. Okay, so broaden information. We went above it, but no follow through. This was supposed to go even higher and it didn't. This is relatively bearish. And we have a small range defined here. Thinking, just say is this. I won't put a cap on the lower side. So basically, whether the question is if it transforms this into support, the broadening formation trend line. So it should do this. It can do this actually, not should. And that's relatively bullish. If it goes below this level, this 547 level, then things become bearish. And I would expect we drop and we potentially retest the lower trend line of the broadening formation. I'll expand this a bit. So my target for this would be either just below 520 for this, so either here, and if it's not there, I would assume it's a fake out. Fake out, then does this, recaptures the AVWAP, and then it goes crazy. If it gets rejected by the AVWAP, we're talking probably to go lower. AVWAP from I don't think we're getting this. Things are way too bullish. And like I said in the post on Twitter, if breadth improves, people will be buying a lot. There will be FOMO. Uh, the reason why we're having bad breath is because we are having bad breath, basically. Uh, People are reluctant to buy into the other stock because the technicals are very, very scary at the moment. But if we get a bit of a correction in the the mega caps, and breadth improves in the other names, uh, the market will look a lot more healthy and people will be very confident in another bull leg up. So if breadth improves, we get people buying and it should be much better than this. So my base scenario is basically drop to 520 and we bounce. I think that's the 50 MA on the daily as well. 519 is the 50 MA. So another test of the 50 MA is basically the base case, and then we bounce and go higher. Uh, Expectation is that this starts Wednesday, Thursday. Probably we peak out on Wednesday. Maybe Nvidia hits 540. I would, I'm going to be happy shorting Nvidia and buying some puts on Nvidia at 540. But overall, this is a bullish setup. Keep an eye also on the way it happens. Like let's say we get to Nvidia 540. Market is like what 548. SPX 5500, and then we get a reversal and we end up the day like minus 1.5%. Minus 1.5% is not scary at all. We don't give a shit. It's perfectly reasonable that we get this 520 pullback and nothing really bad happens. But if the minus day is minus 2.5, minus 3%, then it gets more scary, more dicey. The bigger the drop, the more drop it can cause afterwards. Uh, and that's kind of it. Oh, and remember that we're supposed to go a bit higher before we go lower. 547, 548 is possible uh, till Wednesday. Next week we have no catalysts like economic calendar. Something like this. Okay, I talked a lot, didn't really make things less confusing, but still hope it helps. Have a good weekend. Bye bye.